All right, if you care about markets, stop scrolling for a second and stay with me. Something just shifted, and it's not showing up in most headlines yet. Silver didn't spike because of Reddit traders or hype. It moved because a structural pressure point just cracked. This just happened, and the timing matters. A sudden 25% tariff announcement hit the global trade system like a dropped wrench in moving gears, and silver reacted immediately. That's not coincidence. That's signal. And if you understand why silver moves first in moments like this, you can see stress before it shows up everywhere else. I'm going to walk you through what's happening right now, why silver noticed before most people did, and how you can spot this pattern again the next time it shows up. Before I explain what caused this move, let me teach you something most people miss. Silver isn't just a shiny rock people speculate on. It lives a double life. On one side, it's a hard asset people run to when trust breaks down. On the other side, it's a critical industrial input that gets consumed by the real economy. That combination makes silver hypersensitive to stress. Think of it like a smoke detector in a building that's also wired into the electrical system. When confidence drops or costs rise, silver doesn't wait for permission. It reacts. So when you see silver moving fast and aggressively, it's usually responding to something deeper than price charts or trader sentiment. That dual nature is what makes silver so powerful as an early warning system. It's not just reacting to fear. It's not just reacting to demand. It's reacting to both. And that convergence creates urgency that other assets don't have yet. Now, if this is making sense to you, drop a comment below and let me know what you're watching in your own portfolio. Because what I'm about to show you applies beyond silver. It's about reading structural pressure before it becomes obvious. So here's what's actually happening. A sudden tariff shock doesn't just make imports more expensive. It ripples. Let me break down the sequence the way markets actually process it. First, tariffs instantly raise input costs for manufacturers tied into global supply chains. Autos, pharmaceuticals, electronics, heavy machinery. All of that gets more expensive overnight. And I mean overnight. You don't get a grace period. You don't get a phase-in. The cost structure changes the moment the announcement drops. Second, companies don't know who absorbs that cost. Do they eat it? Do they pass it on? Do they restructure suppliers? That uncertainty freezes decision-making. CFOs don't greenlight expansion when they can't model margins. Procurement teams can't commit to contracts when pricing is unstable. Third, capital starts shifting toward assets that don't depend on smooth trade flows to hold value. That's where silver steps in. Here's what's wild about this moment. Silver is getting hit from both sides at the same time. Industrial demand doesn't disappear just because tariffs go up. Solar panels still need silver. Medical equipment still needs silver. Electronics still need silver. That consumption is baked into the real economy. But now, at the same time, investors start treating silver like insurance against policy instability. So when that tariff headline hit, silver wasn't guessing. It was pricing in higher production costs plus lower confidence in the system holding everything together. That convergence is rare, and it's powerful. You don't often see industrial necessity colliding with monetary defense at the exact same moment. When it does happen, you get moves that shock people who aren't paying attention. But here's the part that should make you nervous. This wasn't framed as negotiation. It was framed as leverage. And markets react very differently to leverage than cooperation. When trade policy feels like a chess game where someone's trying to force a specific outcome through pressure, volatility doesn't stay contained, it spreads. Because if you're a business operating across borders, you're not just worried about this tariff. You're worried about the next one. You're worried about retaliation. You're worried about getting caught in the crossfire of something that has nothing to do with your company. That fear premium shows up in asset prices immediately, and silver absorbs it faster than almost anything else. Now let me show you what very few people are talking about. The tariff itself is one thing, the speed is another. Markets can adjust to policy changes if they see them coming. But when a 25% tariff drops without much runway, there's no time to hedge properly. Supply contracts that were profitable yesterday are underwater today. Companies that were planning shipments based on one cost structure now have to recalculate everything. And here's where it gets interesting. Silver producers and refiners are part of that global supply chain too. So you've got upward pressure on the commodity itself because of industrial demand staying firm, but you've also got logistical friction in actually moving the metal around. That creates tightness. And tightness in a market that's already reacting to monetary uncertainty, that's fuel. Zoom out for a second because this isn't new. This is the same playbook we've seen before. Every time global trade shifts from collaboration to confrontation, silver moves early. In the late 1970s, trade stress and inflation uncertainty pushed silver into a historic surge. Back then, you had oil shocks, you had currency instability, and you had manufacturing supply chains getting disrupted by geopolitical tension. Silver went from under $6 an ounce in 1979 to over $48 by January 1980. Now, I'm not saying we're heading for that exact trajectory, but I am saying the conditions that created that move started the same way. Structural pressure first, price discovery second. Fast forward to the early 2000s. Supply chain fears and currency instability reignited interest in industrial metals. You had China ramping up manufacturing capacity, which meant massive industrial demand for silver. At the same time, you had concerns about the dollar's role as reserve currency after aggressive monetary easing. What happened? Silver climbed from around $4 in 2001 to nearly $50 by 2011. That's a decade-long trend, not a flash spike, and it started with people recognizing that silver sits at the intersection of industrial necessity and monetary distrust. And more recently, during trade war escalations in the late 2010s, silver repeatedly front-ran broader market volatility. When tariff headlines started cycling through the news in 2018 and 2019, silver moved before equity markets fully priced in the uncertainty. It didn't wait for recession headlines. It responded to pressure building under the surface. The larger story is that silver acts like a stress gauge for the global system, not a speculative lottery ticket. If you treat it like a lottery ticket, you'll get chopped up by volatility. But if you treat it like a signal, you can position yourself ahead of moves that take months to fully materialize. Now let me be skeptical for a moment because I want you to hear independent thinking, not just hype. Could this move fade? Absolutely. Markets overshoot all the time. We've seen silver spike on headlines and then give back half the move within days. Could traders be front-running the news and then backing off once they've taken profits? That happens too. And yes, silver is volatile. It can scare you out if you don't respect that. So I'm not sitting here telling you this is a one-way rocket with no turbulence. That would be dishonest. But here's the thing about calling this just speculation. Speculation doesn't line up with supply chain stress, industrial demand, and monetary uncertainty all at once. If this were purely speculative, you'd see it in meme stocks or low-float coins, not in a commodity with actual industrial consumption. Focus on what you can control. You don't need to predict exact price targets. You need to understand the conditions that create sustained pressure, and those conditions are objectively increasing. Higher input costs aren't going away tomorrow. Policy uncertainty isn't getting resolved this week. And industrial demand for silver and technology and energy isn't optional. Those are facts, not opinions. There are probably 3 types of people watching this right now. The first type already owns silver, maybe physically or through exposure like mining stocks or ETFs, and you're wondering if this is the move you've been waiting for. I get that feeling. You've been patient, maybe for years, watching silver grind sideways while other assets ran. Your job right now isn't to celebrate. It's to stay disciplined and watch the macro signals that either validate or invalidate this trend. If tariff escalation continues, if industrial demand holds, if monetary policy stays accommodative, then you're in a good spot. But if those conditions reverse, don't let confirmation bias blind you. Protect your capital. The second type doesn't own any silver and thinks this sounds dramatic. Maybe you're skeptical of commodities in general, or you think precious metals are for doomsday preppers. I understand that perspective. Your opportunity here is education. Learn why silver reacts to trade stress so you're not late when this pattern shows up again. Because it will show up again. Global trade isn't getting less complex. Supply chains aren't getting simpler. Policy isn't getting more predictable. So even if you don't act on this specific move, understanding the mechanics means you'll recognize the next one. The third type is actively trading and looking for timing. If that's you, remember this isn't about chasing candles. It's about understanding why volatility is expanding so you don't get chopped up. Silver can swing 5% in a session. If you're trading without understanding why that volatility exists, you're gambling. But if you understand the underlying pressure, you can position with conviction instead of panic. No matter which group you're in, the principle is the same. Markets move on mechanics before narratives catch up. By the time everyone agrees on what's happening, the best entry points are gone. So here's what I want you to answer in the comments. Which type are you? Are you already positioned, watching from the sidelines, or actively trading? And more importantly, what are you watching to confirm or deny this thesis? I want to hear your perspective, because that's how we all get sharper. Now let me tell you where I stand. I'm not screaming panic, and I'm not dismissing this either. I'm watching signals. First, I'm watching whether additional trade actions follow, because escalation matters more than a single headline. If this tariff stays isolated, markets can adjust. But if we see follow-up measures, retaliation, or expansion to other sectors, that changes the game completely. Second, I'm watching industrial demand data, especially in energy and manufacturing. If solar installations slow down or electronics production contracts, that would weaken the industrial support under silver. But right now, I'm not seeing that. Third, I'm monitoring monetary policy language because stress plus loose confidence is silver's fuel. If central banks start signaling tighter policy to fight inflation caused by tariffs, that could complicate the picture. But if they stay accommodative, because they're worried about growth, silver benefits from both sides. Based on my analysis, this tariff move wasn't random or emotional. It was structural. The fundamentals that drive silver didn't break. They tightened. Industrial consumption is still there. Monetary uncertainty is increasing, not decreasing. Supply chain complexity is rising, not falling. And if history rhymes even a little, silver isn't reacting late. It's reacting early. That doesn't guarantee it goes straight up from here. But it does mean the conditions for sustained strength are building, not fading. Now, I'm not a financial advisor. This is not financial advice. Do your own research. Verify what I'm saying. Check the data yourself. Form your own conclusions. But if you made it this far, you're the type of person who thinks independently and doesn't just follow the crowd. That mentality will serve you well. If this breakdown helped you see something you weren't seeing before, share it with someone who needs to hear it. Subscribe if you want more analysis like this. And stay ahead of the narrative, because by the time it's obvious, the opportunity's gone. Think critically, verify what you hear, and make your own decisions. Stay sharp out there.